Good evening, all. Ira Epstein, and here we are on Wednesday, the 26th of July, 2023, 5:40 p.m. Actually, it's 5:50 p.m. I take that back. 5:50 p.m. Central Time. And today is FOMC day, so we're through with it. And basically, it's just what I wrote in all my reports, what I've told you here over and over. If the Fed was going to be true to form, they would stick to the script. And Fed Chair Powell didn't deviate one iota. What he said was so clear. Number one, they are nowhere near finished with beating inflation down. The goal is still 2%. Number two, every meeting is live. It is not going to be a policy if we skip a meeting, we wait, we see. Whatever the data says the Fed will do, they'll do. Does that mean that we're closer and this raise today of 25 basis points is one and done? It could be. Again, the data is going to dictate it. Not the traders that think this or that. You can look at the CME page. You'll see how everybody's thinking, but it's pretty evenly divided. Now, here's the beauty, and this was said as well. The Fed has until September 20th. It's going to get two jobs reports, two CPI numbers, two of everything. And from that, it can decide, is the deceleration in jobs enough? The goal is not to break the labor market. The goal is to slow down the increases in the wage impact of it while engineering restrictive monetary policy that slows the economy down via, another word, beating inflation down because you don't need as many of those goods. He went on further to explain the beauty of all this with what the pandemic caused. That is behind the market and where we're at. He did not get lured, and I thought somebody would ask the question, are these negotiations that have been going on with labor inflationary? What are they? He said no, he doesn't get involved in the negotiations. He didn't even answer the labor question, what's a 30% increase in a wage do? He stayed away from it. You have to admire that. He doesn't want to get politicized on this, so he stepped back. So what does it mean for us? Number one, look at this. The handcuffs are off. You can go back to trading. And instead of worrying, oh, next month we get another Fed meeting, you have 8-9 weeks before the next meeting. Enjoy them. Now you go back and you wait. Now, you know that in the Dow, you're setting records that you haven't been at since what, 1987? Of how many days in a row in the cash Dow you've seen gains. And I was just asked a question. I just did a show in Australia. And Ira, how high can it go? And I said, well, nothing grows to the stars and nothing goes down forever. I said, is the market ahead of itself? Not really. What the market is saying, think of embedded readings. You see me show them to you here when the slow stochastic's embed and I go to you, people don't see that strength. And when it starts running at that upper Bollinger Band, how strong that is. Okay, people will say, oh, it's overbought. No, my argument is it's getting stronger. Well, what the Dow has done is it's taken those 30 stocks and it's brought them into line with the NASDAQ and other markets. Think about that. This was not the market that was leading the way. It's always been the NASDAQ in the recent times or the S&P at times leading other parts. Finally, those Dow 30 came alive. That's the way that I'm analyzing it, and that's the way I'm going to handle it. The amazing thing to me is how many industrial markets are going up because every time I see a Fed region, it's weak, not strong. So that brings us to the gold market and what I've told you. I have been expecting for weeks, not a week, this is a weekly chart for weeks, that if we bounce, we would get a test of the 18-week average and what it does from that point sets the next move. Does gold come alive with the inflation now? Why? It's not just inflation. We know it's there, and inflation doesn't have to roar, and I'm talking everyday inflation. It's that the dollar probably doesn't go up, and off what the Fed just did, do interest rates have to keep moving forward? Most of the analysts that I pay attention to don't think that from the 10-year to the 30-year that you're going to get rising rates any longer. In other words, we've probably seen the peak of that. The short term, the 2- and 5-year, you got to be careful of. That's where the Fed's actions will count, the roll off of the balance sheet and so on. But The gold market knows it. So this is your battleground. And on a closing basis, you're at 1974.80. That number's 1971.80. This system, if it were Friday afternoon, I'd say, the market is saying that it's now leaving the bear phase, trying to enter the bull phase. When we come and we take a look at what the gold is doing right through here on this chart action, you have a pattern of a higher high, a lower low. You're backing off. You want to get to the pattern of either higher highs and higher lows over the 18-day average or embedded slow stochastics. What we have right here is you're over the 18-day average. The market is sitting here and caught between the 100-day average and the 18. It's not changed since yesterday when I was telling you what I thought, and the Bollinger Band. Now, if you can clear again the 100-day average in green, then the Bollinger Band becomes your next resistance spot, and you're overbought. You either embed to get another leg up, or you get more of a correction in it. Right here, it's sort of no man's land in it. When we look at August gold versus Sep silver, continues to fall. It means silver should have an easier time gaining on gold. The pattern here is higher high, lower low, but trying to embed. You're getting both numbers over 80 tonight. Now, that wasn't the case on the close today, and you can see before that what the market was doing. So this market's flirting with trying to figure a way out if can it embed and not be overbought. That's what I think it's trying to do right now. In the copper market, you are overbought, but the market is looking at this whole setup and saying, you know, I'm over the 200, the 100, and the 18-day average of closes. I've made a run, I'm talking like on the copper market, to the 18-day average. I'm holding it. This looks good. You know what the market's waiting for, and I do. It's waiting for China to announce programs to get the real estate market going, to get the economy going, to get the industry going there. It's multiple all the way through, and the beneficiary will be this. Now, I think it's called Cochilco, which is the Copper Commission out of Chile. And I write tonight in a report what their take on this is. They don't see China yet doing any of that. They see that the market is still, because of China, prices not advancing that much right now. My report covers how much they're producing right now in copper versus what they did last year, where they see it all going. Get my report. It's one of the free offerings we'll talk about right here when we finish this up. In the platinum, well, you went into the resistance zone, just like we've talked in some of the other metals, fighting up to the 200, the 100-day average. You got in between the 200 and the Bollinger Band, and you've stepped back. But you're not acting like a bear market. You're acting like a market that got overbought, correcting a little bit of it, but trying to hang on right here. Should you close under the 18-day average, and that number is 958.70, then I enter the bear phase of the market. But until then, I don't see this market there. Last, the dollar. I'm looking for a peak in the dollar now. I am in the camp that sooner rather than later the Fed will be through. Do I care if it's another rate hike? Do I care if it's another one after that, if that happens? Not really. You're talking, is this the last one, two, whatever it is? That's where I think you're at. And I think the market will start absorbing that. Now, the other thing you're going to hear is other banks are going to be talking that. Tomorrow, you get the European Central Bank. We will see how Ms. Lagarde gives you all the wording on that. That's going to be super important. Their decision comes out first thing in the morning, and then they follow with the press conference. And remember, that is all followed up on Friday with the Bank of Japan Central Bank, and next week, the Bank of England. So you've got all these coming in at you right now. Pay attention. If you're a currency trader, I don't like going into these because you can get little surprises, so be a little bit cautious with them. So as you heard me just now, I said take advantage of the offerings that we have. And here you go. You go to our website, iraepstein.com, or you just click at the top up here. It'll take you right there. And here's the offerings page. Now, there'll be a lot more. This tells you just click the blue button to select your offers. You can click as many as you want. It's everything from the charting software packages to my updates to the Linn Group's written updates, to price counts that we love. Price counts are one of the coolest things you want to get if you can take a look at them. Why? It is not a enter here signal. It is, if the market's in a trend, where might it be going? Do you understand the difference? One of the hardest times you have probably, and I know I have, is how high might a market go once it gets going? And I was asked that question today in Australia. And my answer was, it'll go wherever it's going. Why did I say that? I said it because the price counts haven't been met. This thing can go higher. And you look at them. Now, what happens when you meet them? The odds are at that point you want to be taking money off the table. There's three that are hitting often. The first one's the highest probability one to hit. Each one has a lower probability. You can go out to 5. It's so rare you'll get to the 5th. They're not worth talking about. They're worth knowing where they at in case the market does something like you're doing right now in the Dow. So learn that. It's all here. I even have courses to explain how to work with the price counts and where you go with it. So how do you get all this? In other words, you go to our website. Click up here to get there, or go to iraepstein.com, free offers, sign up for what you want, and away you go. I'm Ira. You have a good day. I'm glad this is over. Now we can get back to serious trading. Take care.